Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, June the 22nd, the year's 2020. Let's talk trading, not your trade. Of course, I want you all to be aware that these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And when you're trading, do not lose more than you're willing to lose on any one particular trade. And as far as the brain management side, do not succumb to any of these, the FOLO, the FOMO, the ROMO, the ROGO, or the ROBS, because you don't want that pain and anguish, because it's not coming from the market. It's coming from your reaction to the market. And I've got Walmal on the line, and we're going to go back, and we're going to talk about not your trade. So what isn't your trade, Walmal?
Well, it's like even this morning, I was in a situation where I was not sitting at my desk, and I walked in and sat down at my desk, and there was a trade. It was a perfect trade. It was a trade that I would have gotten 10 bits on it. It was a Walmal trade. Everything looked good. But at the same time, it wasn't my trade. It wasn't my trade to take. It wasn't my trade. And the reason why was because I've got a rule in place, and that rule says that I need to be sitting in front of my computer for, an amount of time just so I'm in sync with the market. I know what the market's doing. At that point in time, I had not had time to go and check to see if I was going to go and jump in front of news. And that was one of my rules, don't ever jump in front of news. So I just didn't have the time to do it. So I didn't take the credit. Why? The trade. Hindsight, I had some Romo. In fact, I was on the phone with TheRumpledOne at the time. I had some Romo. It would have easily gotten me my core that I need for the day, literally within less than a minute. But it was not my trade, so I didn't take it because not all of my rules were met.
Yeah, and it's really hard sometimes, because you'll see something and you have a trading plan, but you see something else, and it's kind of like the shiny object syndrome. Something catches your eye and you jump in, and then it's like usually you wind up with some brain management having to do. It's like, oh man, I just regretted being stupid, or or you FOMO'd it. It's like, oh, I better get in here because getting's good. But you really just have to take your trades. And sometimes, your trades go against you, because there's a difference between, say, a bad trade and bad luck. I mean, I'm the master of bad luck. I'll take my trade, do everything right, and price runs against me. In fact, Walmal and I, we joke about it all the time. But the thing is, if you know that your method is going to pan out over the long haul, you just have to keep trading it. You cannot alter it. You got to take every signal, because you don't know when that winning streak's going to happen. And that winning streak could be as long, if not longer, than the losing streak, and it could pay extremely well.
You're exactly right. It's very, very important to go and take those winners. And the most important part of it is creating your plan. Now, I've got some rules in place that prevents me from taking catastrophic losses. Like I don't want to go and lose 3-4 in a row. So I've got things in there that prevents me from going and taking that many trades in a row, because then I know myself. And when I take that many losses in a row, I now run into self-confidence problems. I run into all types of psychological problems. I also wind up getting some anger involved too, because now I'm going to go and I'm going to take my anger out in the market, and I'm going to get back what those guys went and stole from me. And you can't do that. You need to have your trading plan in front of you, and you need to go and trade it. And that's the important thing, is to go and do that. And part of that is you got to go and make sure that you're only trading what's in your plan to do that. And you have those rules in place because statistically it's going to work out to your advantage. You know that in the long run it's going to work out to your advantage. I was Tio's already kind of alluded to it, but I was teasing him this morning a little bit. In fact, he had just gone short, and I went long. And mine worked out, and unfortunately, he's still in that trade, I think, at this point. But that's just he was trading a different method than I was, and that's going to happen. That doesn't mean his method is worse than mine or mine's better than his. It just means at this point in time, the way the methods work out, it just works out that way. That's just the luck of the thing, because when you go jump into a trade, I jump into a Walmal trade, and I'm going to be honest with you, when I jump into a trade, I have zero understanding or knowledge of whether or not I'm going to come out with 10 pips in my pocket or I'm going to come out with negative 10 pips in my pocket. I don't know which way it's going to go. Nobody knows. That's the whole point of the market. If somebody knew, I'd be sitting on an island somewhere, owning the island, because there'd be no point. I'd win the entire thing and walk away, But that's just not what's going to happen. So what do I need to do? I need to trade my plan and keep trading my plan and just stay on top of it for as long as I can, as long as I'm within my parameters, so I don't risk too much. Because of course, the other part of that is if I risk too much, and risking too much is not necessarily just what you're willing to lose on one trade. But I think you also need to go and have some type of daily limit, how much you're willing to lose for that day or that week or that month, whatever it may be, before you stop and you don't get yourself into a deeper hole.
Yeah, that's really important about, trying to get out of the hole, because then you definitely have a lot of that brain management going on, and you'll do things that you normally won't do. And it's just one bad decision leads to another. It's like a domino or snowball effect. I mean, you can just really get yourself cut up bad.
Yeah, and you start making reactionary moves. You're sitting there, let's say you're short, and you see an opportunity. Oh boy, I can get short in here too, because that'll go and get me. That'll cut my loss, because I'll be able to average in. But if you didn't get a true signal there, why are you jumping in?
So I just put up the rat zone because, I was telling Walmal that, that's what I have to do. I really need to wait for price to get in the rat zone because I got caught in between the zones, and I'm not good in between the zones. In the rat zones, I'm pretty good. And so once again, you got to trade your trade, not somebody else's trade. And the other thing is you got to take profit off the table, because here, I'd gotten short, I think somewhere around 2400, 2404, and price went down. Of course, I jumped out quick, but then it went down. Then it came back up, and I was kidding with Walmal. He said, see, you could have had anywhere from 20 pips, but if you didn't take it, the market would have taken it back, every last one of it. So those guys out there who kind of laugh at us because we're talking about making 3 pips or 5 pips or 2 pips or whatever, only 10 pips, and they're out there talking about making hundreds of pips. Well, more power to them. I guess, if you got in at the open and you just held on to it, you'd be up 107 pips. But I don't know how many people would have done that, considering you would have been here and come all the way back here. That's 50 pip turnaround. Do you sit through that, or do you take the money off the table?
And again, that's, I don't want to go and besmirch anybody, because, that's their style. If they can make money doing it, more power to them. Let them go do that. And I'll congratulate them and slap them on the back for doing that. That's not me. I can't do that, that's not my style of trading. It's not who I am, and that's we talked about this a couple times in the past, and you need to know who you are. I think the biggest part of trading is, do you know who you are? Do you know what your limitations are? Do you know what your assets are? Are you the type of person that can sit there and be down 20, 30 pips and it doesn't bother you? If you are, then you can go and take trades like that. I'm not that person. I know I can't do that. And because I know I can't do that, I've got to go and change my trading style and do it differently. And that's what, like most traders, I'm no different than anybody else. When I first started trading, I was like everybody else. I lost 2 or 3 accounts, I went and made lots of mistakes until I found something that was profitable because, why? I was testing things out to see what would work. And the funny thing is, I found lots of methods that worked, when I was in demo, and then as soon as I went to real money, then it's sort of like, it all hit the fan, as they say, because then it was real money on the table, and I learned that, hey, I've got a deficit here, I can't sit through a big move against me. And I found that out real quick, and that was me. Somebody else could. That's not me, that's not who I am. Maybe someday I will be like that, but I can't do that right now. And so because of that, I started looking for something where I can go and look for smaller moves. And if I look for smaller moves, I can still make money. I can make a living off of this because if I just go and ratchet up the amount I risk on a trade, I can do it.
Yeah.
And for whatever reason, that works for me.
Yeah, talking about, do you want to be a minimum wage trader or do you want to, make lawyer money? And if you want to make lawyer money, you're going to have to ratchet up your position size, because if you think you're going to make lawyer money at 0.01 lot, a micro lot, a dime a pip, it's not going to happen. And here we got this prices in the rat zone, green H1, so basically sitting on hands. And for those of you out there, somebody wants to say, oh, that repaints. Well, here's the version that doesn't quote unquote repaint, because you can see here how these dots kept moving up as the high of the day moved up, and there's the low of the day right there, and they stay the same. Here, let me show you guys. That's the TRO dynamic rat. If you like having these, actually they're not dots, they're little boxes, but I call them dots. And so you can see here how the zone just kept moving up. So right now we're going to have a new zone. And this is just using the old 20 pips off the high and 20 pips off the low to determine the rat zone. And just not going to trade against that H1 candle color. Just going to be patient, wait, and maybe it moves up and retraces. Maybe it doesn't. I think on, in fact, I believe it was Friday, price actually closed within the rat zone. I think it was only like 7 pips off the bottom when it closed. So, I mean, that does happen. In fact, we can, let's see, we can pull up the price action chart here. Look at the daily. Yeah, you can see there. No, maybe it closed up. It's closed at, it's hard to see. Okay, here we go. The low was 43, the close was 58, so it closed within the rat zone. And that usually doesn't happen, but it does happen every now and then. So,
and that's why we control our risk.
Right. And as you can,
and that's okay.
Yeah. And price is now putting in a higher high. So I was joking earlier. I said, I wonder if that the pound wants to be 123. It's like, nope, we want to be 125. They like to make me look like an idiot, right?
Yeah, but and the thing is, you just got to go, and that's the whole thing about trading what you see. The reality is, you know what? Okay, I thought it was going to go to 123. Guess what? It didn't. Okay, so now that I know it's not going in that direction, how do I trade what I see? Do I go and would I take a rat zone trade here? No. Why? Because we're 47 minutes in, we've got a big green candle. Now we're just going to sit on our hands, wait to the next hour. Let's see what the next hour comes, and we'll see what happens. And just based on that, we'll go and make a decision then. And that's the thing about not getting into trades that are not your trades. You can't get into a trade that's not your trade, because the rules say that, I need to go to go short here, I need a red H1 candle. Does that always work out to your advantage? Most of the time, but not all the time. And so we just have to be careful. So we just have to go, wait. Right now, I guess we're about 10, 12 minutes away before the next candle comes. It's not going to go and hurt us to go and wait to the end of this candle.
Yeah, but you know what? It's the end of the video. Fastest 15 minutes in trading. So remember, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. TheRumpledOne with Walmal signing out.